Very good. Good profit. You'll say, what is this? 1 lakh rupees for Reliance? So what will you say? The company is not profitable. Profitable? No, you will say. Now see this. Figure is same. 1 lakh. For Kirana shop you said, very good. Thumbs up. For Reliance you said, down. 1 lakh, right? Amount is same. What is the problem? The problem is turnover. Turnover of Reliance is what? You can't even say 1 lakh rupees per month, or anyone amongst you also say, my salary is 1 lakh rupees per month. Then you will say, okay, very good. But tomorrow if the MD of your bank says, MD says my salary is 1 lakh, you'll say, no, it can't be 1 lakh. MD. What does it mean? Relative. Okay, two levels are compared. Same thing is over here. So got it everyone? Profitability is a relative term. It is a metric used to determine the scope of company's profit in relationship to the size of the business. In relationship to the size of the business. Very important term, size of the business. Profitability is a measurement of efficiency and ultimately it is a success or failure. So profitability is a measurement of efficiency. Efficiency means how efficient you are. That's why we said Reliance says 1 lakh profit, not efficient at all. Panwala says 1 lakh profit. Okay, good. Isn't it? So got this concept? Profitability and profit. This comes in exam. Every exam this comes. And now, those who are watching on YT, YouTube, kindly note your classes will get over now. Because it was for first 10 minutes only. So 10 minutes are over. Your class will get over on YouTube now. If you want to watch, kindly download the app and watch the live class on the app. You will have the recorded session also, but on the app. So got this concept, profitability and profit. This is a very important concept in exam and it is definitely there in the exam. Kindly note. Okay. Now next term. Next term is ROA, return on asset. What is return on asset? See, asset means what? What is an asset? For a bank. What is an asset for a bank? So asset for a bank is what? Asset means loans. Asset for a bank is loans. Okay, say this. A return on asset. Firstly, before knowing return on asset, you must know what is asset. Asset for a bank is loans. Okay, it can be other assets also. See this. Bank has other assets also. If bank has branches which are purchased, own branches, that is also an asset. The inventory, that is also an asset. The cupboards, furniture, that is also an asset. But kindly note, whenever you say return on assets, you are actually talking of liquid assets, that is basically your loans. So ROA means loans. Now not only loans, there are others also, liquid assets. What are the others? Others are if my bank has purchased certain bonds from somebody. Purchased. I have not issued. I have purchased a bond from somebody. So that is an asset for me. If my bank has purchased a bond, that is an asset for me. So now, what are the two important assets? One is your loan which you give, okay, and second is the bonds, right? So look at this. Assets are loans, liabilities are deposits, right? And next one is this TPP, third party products, okay? So you basically have only three businesses in your bank. One is assets, loans. Second is your deposits. Okay. And third one is what? Your TPP. These are the only jobs we do in our bank, right? So bank basically, remember, there are core as well as TPP. Okay. Bank has core, that is loans. What is the income source? Your income source is your loans. And next is TPP, third party products, right? So that's why focus on this. Loans, and TPP. So coming back to this part now, ROA. Now you know assets. Assets means loans. Take loans. Forget the bonds for time being. We are in JIIB. In JIIB, we need not think too big. We'll only consider loans. Okay. So return on assets. Now assets is loans. So what is return on assets? A return on asset is determined by the amount of income that it earns on its net interest income and fees on its services. So two parts, kindly note, there are two parts to this. What are the two parts? Which are the two parts, everyone? Which are the two parts? The two parts are, number one, NII. NII. Now what is NII but? What is NII? NII is net interest income. Means what? What is net interest income? Wait. Shraddha or Saburi? I'll show you. We are having all the topics in detail we are covering. Okay? So, return on assets is determined by the income that it earns on its NII, net interest income, and fee income. Fee income means what? Fee income means your third party products. You sell everything. Mutual fund, insurance, lockers, LC issuance. LC issuance is also fee income. So you do that also. LC issuance. So all these incomes which are not a core banking products. You sell gold coins also, sovereign gold bonds also. Everything you sell. Bankers nowadays sell everything. Only few, what is remaining? Selling chocolates is remaining, right? Selling chocolates and TV, fridge, that is remaining. Otherwise we sell everything. On our app, if you see, on your app, bank's app, you are selling railway tickets also. You are selling hotel bookings also. You are selling holiday packages also. Some banks are selling educations also. Means admission, this, there, everything is being done by the banks. Only what I said, selling TV, television, fridge, bikes, cars, loans already we sell for that. But what is pending is this, right? So, net interest income and fees income, right? So it is a combination of these two. NII means loan and your fee income. Got it clear? Net interest income means what now? Net interest income depends on partly on the interest rate spread, which is average interest rate earned on the assets minus average interest rate paid on the liabilities. So NII depends on what? NII is what basically? NII is the difference between the loan interest minus the deposit interest. Getting my point? See here, why do you say always your loan interest on loan is always higher? Why do you say this? Means if your deposit is at 7%, your loan will be at 9%. If your deposit is at 7%, your loan will be at 9%. Why do you say that? Why do we have this? 7 and 9. Why don't we have the reverse thing? Why don't we have the reverse thing? Means my deposit is at 9% and my loan is at 7%. Why don't we have this? Because after all, your income should be more than the expense. Deposit is your expense, isn't it? And your loan is your income. Simple. So that's why your income should always be higher than the expense, right? So that's why, what is NII then? NII means average income on the loans minus average expenses on the deposits. Okay, average interest rate income means interest income on the loans minus average interest rate paid on the liabilities, deposits. Okay, so NII means what? Loan interest average means average loan interest minus average deposit interest. Okay, got it? NII. But ROA includes what? ROA includes two parts. One is your NII and second is your fee income. Fee income is what? Fee income is basically your TPP, right? Third party products. Here? Okay. So now interest rate spread means what? What is spread? Now this spread and NII and spread, both are same. Only names are different here and there. Some books call it spread, some books call it NII. Now you might get some persons or some banker, some teacher will give you a lot of explanation that spread is different. Spread is different than the NII. Somebody might give you this knowledge, gyan we call it, gyan. Muft ka gyan. Right? We know this, muft ka gyan. There are many in this world who give you muft ka gyan. You go on YouTube, type just JAIIB or CAIB, you type it just. Or JAIIB lectures. You will get so many lectures by those who have not given their JAIIB, CAIB at all in their life. Muft ka gyan, right? Or those who don't know at all, they will also give the lectures. Similar, you have this in every, you type UPSC, you'll have thousands of UPSC streams. UPSC this, UPSC that, UPSC topper, UPSC wrangler, UPSC this, 1,000 things are there. Again, same thing with everyone. So, the point over here is spread and NII are same. Interest rate spread equals to average interest rate received on assets minus average interest rate paid on liabilities. Simple. What was this earlier then? Same. This same. Right? So kindly remember ROA equals to your NII plus fee income. Don't forget this. ROA equals to your NII plus fee income. NII already we have seen, interest received on assets minus interest paid on liabilities. Or you can call it a separate thing, interest earned on securities and loans. See, here I have added a definition of securities. Why securities? What are securities? Securities means your bonds which you have purchased. Kindly note, bonds which you have purchased, not issued. Bonds which you have purchased. Okay? So, interest earned on securities and loans minus interest paid on deposits and borrowings. Clear? Deposits and borrowings. Got this point, everyone? Now, you'll say, sir, securities I told you, bonds. But what is this deposit? You can understand. Deposit means deposit, saving current FD. What is borrowings? What do you mean by this term borrowings? Borrowing means, kindly note, borrowing. PNB gets a short-term loan from SBI. Short-term loan. All the banks get their own short-term loans. Every bank requires it. Every bank will give the money. Every bank will take the money. Short-term. 2 days, 3 days, 4 days. That's it. Short-term loans, these are called as. So, all the banks, that is called as your borrowings. Bank borrowings. Okay? Short-term bank borrowings. Got it? So kindly note once again, what is the basic job of bank? What does the bank do? Kindly note this. What does the bank do? Bank will first get the deposits, okay, and then invest this money. See, bank will get money in two parts. One is deposits from the customers and second is loans from other banks. See, this loans I've kept it over here. Loans from other banks, other institutions. So bank will get the loans from other institutions and deposits, both. Okay, and what will the bank do with that money? It will give it in loans. And second is it will invest in bonds and securities. Right? So these are the two ways of money investing, and these are the two ways of getting the money for any bank. And the difference between this and this, interest on this minus interest on this, will be equal to your NII, isn't it? So interest earned on securities and loans minus interest paid on deposits and borrowings. Got it, everyone? For example, look, let's take this example. We always understand better from the examples, from the numericals. We always focus on numbers, right? So assets. Now let's see. My bond is having a rate of interest of 9%. Bond which I have purchased. Kindly note. Asset means which bond I am talking of. I am talking of the bond which I have purchased, not issued. And loans. Loans means loans which I have given to my customers. So bonds and loans, 9%, 9%. What about the liabilities? Liabilities means the money, okay, which I have taken from somebody. I have to pay interest on it. So deposits, that is 7%. And borrowings. Borrowing means what? The rate at which I have purchased, just now I told you, from the interbank borrowings. So let's say this is 5%. So now what do you mean by this? My average investment or my average income is 9%. See this, average. 9, 9, so 9. And here my average income is what? 7, 5. And average will be 6. So what will be my NII then? NII equals to my income minus my expenses. 9 minus 6. So 3%. Isn't it? That is your NII. Okay? Kindly note, there is a difference between ROA and NII. ROA and NII. There is a difference between them. ROA and NII. Okay? Now what is NIM then? What is NIM? Net interest margin. What is NIM? Understand, many books or many teachers, they use these two words parallelly, NII and NIM. They say, NII, NIM, NII, NIM. They use the word parallelly at the same time. So many of us have the understanding that NII and NIM are same. But it is not so. NII is different, NIM is different. Both of them are different. NII is different, NIM is different. What is it then? Let's see. Say this. NIM, net interest margin. It shows how well the bank is earning income on its assets. Earning income on its assets means what? Means what? Means it's a relative term, it's a ratio. Income on its assets. Ratio. My income upon my assets. On its assets. So, income upon assets. Right? But what is this income then? This income is basically same. Your NII. Income means what? Income means NII. So basically what are you doing? You're doing NII upon assets. NII upon assets. High net interest income and margin indicates a well-managed bank and also indicates future profitability. If any bank, okay, is having high income, NII is more. If NII is more, similarly your NIM will be more. Because what is NIM? I'll give you the formula first now. Okay? See this, NIM. NIM equals to NII, net interest income. Kindly note this point. NII divided by average total assets. NII divided by average total assets. What do you mean by this? Kindly note, NII means net interest income, means loan interest, average loan interest, minus average deposit interest, right? That is your NII. Divided by average total assets, means basically you take it total assets, because in exam they will directly give you total assets. Okay? So, net interest income upon average total assets. Now we'll go for the exact formula for this ROA. Formula is same, which we did in the theory. Only it's given in the formula form. So ROA for banks equals to, Look at it now. You'll find the same thing. Fee income. Fee income means it's from insurance, your LC, your gold selling, your sovereign bonds, your mutual funds selling. Okay, where there is a relationship of buyer and seller. So fee income. Plus, now look at this, NII. So NII is your core income. See here, there are two parts in any bank. One is core income, second is your fee income. Core income means which is your bread and butter, net business. Right? So net interest income, that is assets minus liabilities. Right? Income on assets means interest on assets minus interest on liabilities. Net interest income minus operating cost. Minus operating cost. Okay. So what is this operating cost now? What is this operating cost? Now look at this important part. These two parts already I have discussed. Okay, these two parts. Fee income and net interest income. We have discussed this. Now what is operating cost? Operating cost means which is required on a daily basis to run the business. Which one? See here, I have given over here. Salary, electricity bill, rent, stationery, postage, water, tax, all these, plus many others. There can be thousands. Right? So this is known as your operating expense. So what will you do under this? In this, what do you do actually is fee income plus net interest income. These are the income parts minus the operating expenses. The whole upon, see, this is your total income. Upon now, what did we say? Average total assets. So same thing over here. Average total assets. Okay? Average total assets. Got it? So average total assets. Clear? Concept clear? Type yes in the comment section. Those who are watching on app. Now nobody on YouTube, right? YouTube is over. 10 minutes. So net income upon average total assets. Net income means what? Your fee income plus your NII minus your operating cost. So average total assets is what? What is this average total assets? See here, in exam there are two ways. One is they will give you average total assets directly, some figure. So you take it directly, whatever is given. Else what will they do? They'll give you beginning year assets plus end year assets. Means both the assets they'll give you. Loans at the beginning of the year were this much. Loans at the end of the year were this much. So take these two then and divide it by 2. Add and divide by 2. See this. Beginning plus end upon 2. Average is what? First plus second upon 2. That is average. Same thing. Okay. So what is the beginning year assets? April 1, 2022 means forget this 22. April 1, your first day of the year, financial year. And what is the closing? March 31, right? So this is average total assets. Beginning plus end upon 2. And that is the ROA. Now let's solve a numerical. This numerical is equally important because in this time, in May 25 exam, there were a lot of numericals. People didn't even expect. But at that 24/7 students were ready. Because I had taken all the numericals which are not given in the book, those also I had taken. Because these are asked. Those numericals which are not there in the book, those are also asked. This is not there in your book. Macmillan book, this numerical is not there. But I had taken it. But this such numerical had come in the exam. So that's the beauty of Adda 24/7 classes. Join the classes ASAP. I'll show you at the end how to join. So now let's look at this numerical. Bank assets on March 31, 2023. Now 23. Let it be any year. Bank assets on March 31 are 100. Now you can take this as crores, anything. Take simple figures. See here, we have to understand the concept. We don't have to go for the figures. Right? So, bank assets on March 31 are 100. at 10%. Now look at this, 10% is the ROI. Rate of interest is 10%. So what do you mean by this? I'm earning at 10% on this March 31. Insurance income is 15 rupees. Insurance income. Why this insurance is mentioned? Insurance income. What is this insurance income? It is a fee income. Understand this total of ROA. What does ROA include? ROA includes your NII plus your fee income minus your operating cost, means whatever are the operating salaries, electricity, everything, divided by the whole upon average total assets. So you must focus on that. So now over here, insurance income is 15. Salaries are 10. Now why this salary word is given? What is salary? We saw that definition. NII plus fee income minus operating cost. Operating cost is the salary. Operating cost is the salary. Got it? So, bank assets are 10 rupees, 100 rupees, insurance is 15 rupees, salaries are 10 rupees, NII is rupees 10. NII is rupees 10. Net interest income is rupees 10. So that is given separately, NII. Okay? Loans on April 1 are 80 rupees. Now look at this, 22 and 23. So which is the beginning of the year? Beginning of the year is April 1, 22. Look at the financial year. The financial year over year is 22-23. Look at this. The financial year over year is April 1, 22 to March 31, 23. Beginning and end. That is the meaning. Okay, you should clearly understand what is the beginning of the year and what is the end of the year. You should clearly understand this. Got it, everyone? Clear the concept? You must clearly know this. Beginning and end. So now let's solve this. Okay? Now what do I want? I want ROA. What is the meaning of ROA? What is the formula of ROA? Your NII plus your fee income minus your operating cost, the whole divided by average total assets. Let's find out one by one. Fee income is given as what? Fee income is given as insurance, 15 rupees. Fee is 15. NII is already given, 10 rupees. Okay? Now what are the salaries? Salaries are given as 10 rupees. Both are 10. Don't confuse this. Huh? In second problem, I have taken it separately. So this is 10, this is so. What will you do now? What will be your net income? Net income is your NII plus your fee income minus your salaries, isn't it? So it will be 15 plus 10 minus 10. 15 plus 10 minus 10. So 10 gone, 15 rupees. So net income is your 15 rupees. But what is ROA then? Yeah, ROA is net income upon average total assets. But what is average total assets? Just now I gave you beginning plus end upon 2. Is it given? Beginning is given. April 1, 80. End, March 31, 100. So look at this. 80, 100. 80 plus 100 upon 2. So 90. See this. 80 plus 100 upon 2, 90. So average total assets is 90. What is the ROA then? You want ROA? ROA is what? Your 90, this income 15 upon 90. Net income upon assets into 100. That is the your ROA percentage. It's always in percentage. So 15 upon 90 into 100. 15 1 the 15, 6 the 6 and 100, 16 point something. 16.66 roughly, isn't it? You'll get it as 16 point, not 66, 25, 16.25. Take average 16, forget it, isn't it? Concept is important. Division, you can do it on the calci also. Clear, everyone? So, this is known as your ROA. Clear? Type yes in the comment section. Now, Let's take one more example. See this. This is what I have framed. This I generally frame because I worked in the banking for many years, and that also at the senior positions, senior manager. I worked in trade finance. I worked in treasury. I worked in this corporate finance, retail banking, all of them. So that's why these are very easy to frame. See this. Logic should be clear. Now look at this. Average loan interest is given as 100. Average deposit interest is given as 70. Fee income is given as 40. Loans are given as 200. Now see here. Your average loans, what do you require? Average assets. See this formula. Beginning plus end upon 2. Here, no beginning, no end. Only loans are given, 200. So when you are given such thing, that beginning and end is not given, only one figure is given. Take that figure only. Forget everything. Take only that figure. Got it? So now, how will you find out the ROA over here? So ROA equals to what is your loan interest income? NII. See this. First find out the NII. Give me the NII over here. Anyone who can give me the NII over here? I want only NII. Who can give me the NII over here? Everyone. Who can give me the NII over here? Only NII I want. Only NII I want. Who can give me? NII is related to your core business. Core means loans, deposits. What is the income of on loans? Average loan interest, 100 rupees. What is the expenses on deposit? 70 rupees. So 100 minus 70, that is your NII. See this, NII. NII is 100 minus 70. This is your NII. What is your fee income over here? Fee income means additional income, TPP income. Fee income, 40. So 100 minus 70 plus 40, right? 100 minus 70 plus 40. This is your net income now. Divided by average total assets. But there is no average over here. Directly loan is given 200. So take 200. So what do you get? 100 minus 70 is 30. 30 plus 40 is 70. 70 upon 200. So 35%. You'll get this as 35%. Right? 35%. Clear everyone? 35%. Okay? Okay with this? Got it? Now suppose if I give you, let's do one question. My bank is having fee income as 0. I'm not having any fee income. I'm not having any fee income. No fee income. I'm only doing loans and deposits. So what is the relationship between ROA and NIM? If my bank is not having any fee income, kindly tell me, what is the relationship between ROA and NIM? For that you need to first get back to the basics. ROA means what? Your NII plus your fee income upon assets. Clear? That is your ROA. What is your NIM? NII upon assets. So here, okay? So your fee income is not there. But in this case, what David said, that your fee income is 0. So what will be ROA over here? NII plus 0. Fee income is 0. So NII upon assets. And what will be your NIM over here? NII upon assets. So both will be what? Both will be the same. If your bank doesn't have a fee income or any TPP sale, then it means your bank is having same ROA and same NIM. Kindly keep this in your mind. This is a favorite question in the exams. This is the favorite question in the exams. If your fee income is not there, TPP income is not there, then your NIM and your ROA are same. Kindly note this. Both are same. Got it? Clear these two numericals, 1 and 2, very clear. Move on. Now return on equity. This is the next topic. ROE. What is equity basically? Return on equity. But what is equity? What do you mean by equity? Equity means what are my number of shares? What are my number of shares? But it does not include only shares. Equity does not include only shares. It includes your reserves and surplus also. It includes your net profit also. Okay? But for simplification purpose, let's consider it shares, because after all, in the end, what happens? Your net profit, your reserves and surplus, all